Hey folks, Monday the 18th of September. Welcome back for another week in the markets. And what we're looking at here, really the only show in town this week is going to be FOMC Wednesday, 7 bells GMT as per usual. We're going to get Jerome coming out here. Is it going to be a pause? Is it going to be another 25 bips hike? We saw a pause in June, I think. And now, if you ask me, I think we're going to be looking at a hike, but I'm not a central banker. So other data to note, very quiet day today, Monday. Then tomorrow, CPIs coming out of Eurozone at 10 a.m. Then US building permits and housing starts. Then we go into Wednesday, obviously crude oil half 3 as per usual. And then the slow run into 7 p.m. For the rate decision. And then, of course, we'll have the speech at 7:30, the presser, where the Q&A really is that kind of second bout of volatility. The primary being obviously 7 o'clock when the data is released. Then Thursday, initial jobless claims, half one out of the US. Philly Fed, not that interesting. Existing home sales, going to be quite interesting to see how those figures are holding up. 4.1 mil expected over the prior 4.07. Pretty strong, to be honest. Not really looking to pay attention too much to Lagarde's speech there at 3 o'clock. And then Friday, German manufacturing PMIs. It's not going to be good. Not going to be looking for much to happen here. Probably more downside. And then as we go through the rest of the session, services PMI out of the US, and then later out of the EU, and then later services PMI out of the US at 245, and then the Baker rig count to close it off. And so really, that's kind of the docket. Wednesday being the big one, right? So what is Wednesday? It's the FOMC rate decision. The markets are setting this up for a hold, to be honest here. So you really got to look at this scenario analysis that we love from ING, the Dove hawkish sheet, the base case here coming in at, unchanged. They're unchanged across the board here. Basically the line is that the Fed are gonna pause at this one, see how inflation tracks over the next couple of weeks, and then have the optionality to hike in November or December should they need to. Okay, so that's kind of what the base case is, should there be a pause, right? And the question is how our market's going to interpret that. At the moment, we saw a pretty horrendous down day. I think it was 2% down on NASDAQ on Friday. We're now down 0.36% on NASDAQ pre-market here. SPOO's down 0.21%. It's looking pretty heavy out there on the equities front, and maybe is a little bit of front running positioning happening ahead of Wednesday's presser, Thursday trade. So essentially, I think I'll post a link to this article. This really is the best crib sheet to use as we come into this Wednesday data. Okay, so looking across the rest of the news cycle at the moment, there's just a couple of nuggets I picked out. As we have equities kind of doing this pre-positioning and a pullback ahead of the FOMC statement on Wednesday, I just wanted to look at the equities picture, and we are selling down a bit there on Friday and weak enough on Thursday. So Apple catching a cold in the market, is then catching the flu here. You're seeing the analysis here from Zero Hedge where Apple is now trading below the 50 and the 100. All right, you got the 200 down at 164, is currently tracking about 175s on the market. But more importantly, this is kind of the more interesting chart. Now, this is the S&P 500 or the SPX, which is the ETF of the SPOOs, in pink, and now you have Apple in orange, and you can see that the correlation here is huge, right? Is very strong, but as we come closer to where we are now, you're seeing Apple really under pressure, while the S&P is currently tracking a little bit high in that correlation. So essentially what this chart is highlighting here is the differential, the delta between the two is widening in the spread correlation that it normally has. So, is Apple going to find, a bid and kind of then normalize back to the SPOs, or is the SPOs going to track down even further to follow Apple down in a break, which essentially is kind of like a trend break here from probably DEC 2022. Actually going back to October 2022 here, then through that March low, we're just kind of testing that area there for the purple line. We will be for the SPOs to come down and join Apple where it is here right now. Okay. So, I'll post a link to this as well. Just thought this was kind of an interesting chart. I mean, there's a couple of more charts in here, which really just highlight, might as well go through this here. This really highlights how the darlings, Apple in orange and Nvidia in purple, are getting toasted, while we see in the green line here, which is the Spider Energy sector, or basically this is XLE, which is the energy sector of the S&P 500. And it's obvious, we're way up here on oil, currently trading 90 spot 50s on WTI, and I think we're going to go a lot higher as we go into the end of the year. But I have been talking about there being quite a bit of a pullback due for this market, but I think we'll go higher until that happens. Okay. Just a little more on the equities front here. I thought this is a really interesting chart from Zero Hedge. I'll post a link to this as well. And what you're looking at here is the S&P 500 in white. Well, both of these charts, both of these lines are the S&P 500. The one in white is the S&P XAI, big AI names. Okay. And the blue is the S&P including the big AI names. And you can see how the big AI names are really just propping this thing up right now, So, should you see any of the, NVIDIA is like the big one, right? So should you see NVIDIA come under pressure, that's going to be your big bellwether to say, you know what, I don't think I want to try and buy a dip here on the SPOs today, especially intraday. But I think you should one could probably do oneself a favor and probably hold fire on trying to catch any falling knives until Wednesday, or probably Thursday, to be honest. So just be careful out there. Do be cognizant that big AI names are going to be propping up this whole market, and should they falter, it's all going to come down. Big AI, of course, you see down here: Meta, Amazon, Apple, Google, Microsoft, Tesla, Nvidia, Intel, and AMD, right? So they're the biggies. Okay, so back to sort of commodities. Ukraine here filing a complaint. This is kind of a bit of a spat here. So the Ukraine, the grain deal has been a big thing for ags traders, obviously, because were we not going to get the ag supply from the Ukraine shipped out of the Ukraine to where it had been shipped out of once the invasion had happened, right? And it's been patchy, but the EU kind of running into the picture, trying to save the day, has said, you know what? Don't worry, we'll take the grain. Okay, we'll sell the grain in our markets. But there's a problem with that, in that the European indigenous markets, you got Hungary. Who are the big ones here? It's on this article. Poland, Slovakia, Hungary, these countries have their own grain production, right? And so what's going to happen to their grain production if they're being forced to then take in this Ukrainian grain and sell it in the European Union? Well, of course, it's going to dilute the price and the supply picture, all right, for those producers. And so essentially, these three countries have said, you know what, you've lifted the ban, but actually, you know what, we're holding the ban. And we're not going to be allowing the sale of those crops in our countries. So these are border countries to Ukraine, right? And look, I'm not here to express my opinion or not, but I'll tell you, I think they're right to do that. because otherwise their farmers are going to starve and go out of business. I mean, it's anyway. This is what's going on, making grain and ags trading just that bit trickier. It has to be said, right? So do have a read of this article. This is looming extremely large in the market at the moment. So I really would pay attention to this situation as it goes on. It's messy though. It's very messy. All right, you do know I love a good Australian LNG strike story these past couple of weeks, and it goes on and it goes on. All right, so we did see a bit of an interesting bid come into Nat Gas and Henry Hub, which is not what I would have actually been looking out for. But as this strike situation got worse last week, we did see a little bid come into Nat Gas. It's all kind of given up now. We're just kind of going sideways on Nat Gas at the moment, but I am a little surprised to see, a bid coming into Henry Hub US Nat Gas because of this. And I think the longer this situation goes on, the more urgent it will become for Chinese buyers of nat gas to then look to buy gas elsewhere. And so obviously, who else have you got looking to buy gas frantically? Well, you've got European Union. Okay. And so European Union has been getting a couple of donation tankers, if you like, from the US, and they're expecting more of this throughout the rest of this year. 5.31%. Just mute Tony there. So I think the longer this strike situation goes on, the more we're going to see it affect all global gas classifications. Now, nat gas is a bit of a widow maker in that you can have some great fundamental macro catalyst driving news and it will just not do anything, because essentially most of the time you're actually late to the story and it's being bid up and then sold back down again by the rumor, sell the fact by the time that most of us hear about these details. But lots of money to be made for people who are going to exclusively trade nat gas and energy and be riding this sort of news cycle 24/7. So all right, just quite interesting to see that situation is going forward. So these last two stories, I mean, the sliding home prices in China, essentially, I talked to one of the traders who is in Beijing, I think, and has some warehousing operations in Beijing. And he was saying that actually the stimulus is coming in and there's just a lot of money waiting to go to work in the commercial real estate sector. Okay, so the home prices is a sort of a different thing, but nonetheless, there's money standing by there because the bank is essentially deploying a lot of stimulus into the system. And just you can have a read about this here. So it's kind of one of those situations where we think the world is going to end, but actually it's not going to end, and the smart money is actually piling in as everyone else is kind of like running for the the tunnels and stocking up on their bentos pies and all that stuff. So yeah, just really a word there about that. And then I thought this was interesting. I used to live in Beirut actually, and had a couple of meetings with this chap. So crook number one in Lebanon, the ex-central bank governor, Riyad Saleh, and he is on the run. So this is a really interesting story about the banking crisis, because essentially it's such a mess in Lebanon. It's such a mess. I love the place, but it is such a mess. And now this guy is on the run. Arrest warrants have been issued everywhere. I think there's a red notice has been issued, which means essentially that Interpol have the arrest warrant for him. And so he can be arrested anywhere and everywhere, bar probably Saudi Arabia. So it's an interesting article to see exactly the financial engineering that was going on here. But Salme was actually taking the local banks' foreign exchange reserves and doing a bit of essentially covering some of the trade deficit with that. And so it was really, really messed up. I think he went to the Mr. Bean School of Central Banking by the looks of it. And yeah, so if anyone's interested in it, it's a pretty interesting story. So do have a read. All right, so we can kind of go over here and have a little bit of a look on the market and see what's happening. Yeah, so I did actually want to get to this. We'll just transition over to what's going on here. And you're looking at the S&P 500 right here is in a pretty nice spot to kind of, end this, what has been a pullback here. Big down day there on Friday. I think we could bid out of here, to be honest. I think we saw really good, sort of constructive buying, if you like, here at this line in the sand, 45.42s up to 45.60s. And I think this pullback will just serve a way to get back in on that trade and push over. However, we have a central bank looming meeting on Wednesday. So, just do be careful there. Maybe look at this area come Wednesday. Oil, it's the hounds are unleashed here above this sort of invasion top, back adjusted 89.71s. I think we got supports here, and then we can continue to balance way up to 93.81s. Okay, listen, that is it for this week for the look ahead. Do have a good one, and I'll talk to you in the Discord room. Cheers.